Alright, what is going on, everybody? Hope you guys are having the best day of your entire life. Today I made about $8,600 from my trading today, and I'm pretty happy. I'm very, very happy. But I'm more happy because I took good trades. Money, because I've been day trading for a while. Like, I kind of understand now, money is one of those things, it's a kind of a byproduct. If I worry about the inputs, the output's going to look after themselves. If I take only good trades over longer horizon of time, over longer period of time, I am going to be green, right? If that makes sense. So today I made about $8,600 and took about four or five trades. And let me break down the trades. The first trade was on Tesla, second trade was on Amazon, then again SPY, and then I took Tesla again. And it was a pretty good day. So now there's one thing that I want to break down before we even start this video is very key, very key thing. A lot of people think that, oh yeah, it's easier to make that much money from a $100,000 account. But imagine trying to trade from a 10,000. No, it's not that. It's the percentage. It's a percentage of money. Like 8% of the money. $10,000 account, you still make decent money. $1,000 account, you still make decent money based on that, right? Also, I've been day trading for a while as well. It's kind of, at this stage, maybe it's even less about the percentage. It's just more about me taking better trades. More better trades that I take, over time, I'm going to be big time green. So let's break down the trade. Let's go over why I took these trades, and let me give you the strategies and the system, and let me explain and let me break down why I took these trades at first place. All right. Now, the first trade that I took was on Tesla. So let's go over Tesla. And the Tesla trades came on a 2-minute chart. So why a 2-minute chart? So maybe you should take a note. And by the way, if you don't know me, my name is Somesh, and I've been day trading from 2018 or early 2019. So I've been day trading for a while now. And over time, I've realized this one very important thing, which is you need to learn a system. And the system just doesn't mean strategies like getting in and getting out. System includes your timing. What time do you take a trade? What time frame do you watch? Where do you enter? Where do you exit? What's your stop loss? What's your stop loss strategy? What's your profit target strategy? There's about, option, which option contracts you're going to choose. How you're going to take profits on those option contracts. How you're going to roll your contracts. There's so many things that go into this, right? So write this down. My time frames that I like to watch from 9:30 to 10 o'clock, right before the right at the market open. For first 30 minutes, I watch 2-minute chart. All right, from 10 a.m. to about 11 a.m., which is like 1 hour into the market open, I watch 5-minute charts, and from 11 a.m. to onwards, I watch 10-minute charts. And please don't ask me about your particular time, about your time zone. This is like New York time when the market opens, and just convert the time zone yourself. All right, now let's go over the Tesla trade that I took. Tesla trade was taken around this particular level. Why did I take this trade? Now, the reason why I took this trade, if you zoom out a little bit, you see where was this critical level. This was a critical level right here, right? Last couple of days, we were having a hard time around this level, 177.5. And now we were breaking out of this 177.5. We went up to 178.5. We got rejected, and then the prices started coming down. You see what I'm saying? Now right here, it's a huge confluence. There's a huge reason for me to jump into this trade, which is the first reason is very nice move, and we broke out. Second, the volume on the red candles smaller than the green candles. Third, it's just making a beautiful candles. It's just this looking really nice. You can kind of call it a flag pattern or whatever you want to call it, right? So I took this play around this right here. Stop loss was right below 177.5, and this trade only made me about 10% of the money. I'm not upset about, oh, only made 10%, but I'm more happy about the management, the profit management that I did. I took some profits the moment it touched this yellow line. I took some profits the moment it touched this yellow line, and then it started selling off, and I got out at the break even, which is called negative risk management. So what is negative risk management? Negative risk management means if you are in 10 contracts, all right, if you're in 10 contracts, you take 5 out, where were you going to take your profits, right? The remainder 5 becomes break even on the option strike price. So if your entry originally was, say, $1.50, where were you took your profit, sweet, but your stop loss now becomes $1.50 on these contracts. So even if everything goes south, you do not lose the money that you put into trade. You still get to keep the profits from the original entry, if that makes sense, right? So took some profits, I entered, took some profits here, took some profits here. Why? And then, negative risk management comes into place. My stop loss got triggered, and I was out. And this was a trade on Tesla. But at the same time, I also took Amazon, which was a loser. I lost some money on this Amazon. Not a lot of money, but I still lost some money. And I entered around right here, right? Price started falling, price started dropping. And I entered the moment this previous low of the day got retested kind of. And I entered here. The mistake that I made was I kind of assumed there was a setup there. The setup was originally not there. Why do I say that? Look at this. Originally we sold off and then we picked up really, really huge candle. The candle was so big, right? It's over $1 candle. And then we started selling off again. But the one thing that I failed to realize here was we were not actually tapping the bottom. We were holding the bottom, like clearly we can clearly see. Now, yeah, in the hindsight, it's a little bit easy to see. At the moment, I didn't pay attention. This is the previous low of the day, and you can clearly see buyers are able to close above this particular level. And in my brain, I was like, oh yeah, it's retesting the previous low of the day. You're gonna make a nice move, but it wasn't actually retesting. It was just like trying to close above it. And I got stopped out the moment this price got triggered, 181.2. I didn't lose much, probably lost like 15%, but this is a losing trade. Now, this goes to show it doesn't matter how long you've been trading, you're always going to have losing trades every now and then. You just got to find peace with it. You see what I'm saying? There will be losses, it's just part of the game. You can't get upset about, oh my God, how can I lose? No, doesn't matter how long you've been trading, you will have losses. You just got to find peace with them. All right. Now, the third trade was SPY. Now, SPY trade was taken. Let me break it down. SPY trade was breaking after 10 o'clock. SPY trade was taken after 10 o'clock. So, you know what I do after 10 o'clock? I watch the 5-minute chart, right? Like explained before. Now, on a 5-minute chart, what's happening? There's some indicator that I use that's called ORB. ORB means the range of first 15 minutes. Once we break out of the ORB, the retest of ORB with a confluence is always nice. So I was watching a break once we broke out and then a retest happen around here. And we have 8 exponential moving average, this green line right here, 8 moving average and ORB sitting at the same price point. Okay. And I was like, cool. And what's confluence, by the way? You might ask, what's confluence? Confluence is confluence. That's how it's spelled. Confluence is when there's more than one reason for you to take a trade, which is +1. Okay. Anything you have more than one reason to jump into a trade, that becomes a confluence. It's called confluence. So confluence here is, what is this? ORB level, the range of first 15 minutes. Then we have 8 exponential moving average running through, and this particular spot becomes the confluence. There's 2 reasons for me to jump in. So imagine people who trade ORB bounces, those people are jumping in. People who trade ATMA bounces, those people are jumping in. Now there's a lot of buying pressure happening, and hence we had a lot of green. You see this? Green candle volume, a lot of green candle volume. Also, we got rejected kind of around this 530 area. So I was like, okay, we got rejected on this 530, which is a nice sign. That means this time when we break out of this 530, there will be a lot of buyers. They will jump in. Why? 530 clearly is a lot of sellers. That's why we got rejected. But once the sellers move aside, the price is going to skyrocket. Does it make sense? Think about it as like if everybody's selling their iPhone on Facebook, right? And there's about 1,000 people selling the iPhone sitting at $1,000 each, right? Now, if all these sellers move aside and put their price to a little bit higher to 1,200, now what happens? The price goes up to 1,200 because nobody else is selling at 1,000 no more. Now, if somebody needs to buy it, they will have to pay 1,200 because there's no competition, pretty much, right? Because all the sellers moved aside. Now, all the sellers will move aside. Price will go up. Now, if you are a seller, if you get, like, you have 2 choices. Right? If I come to you and like, you have 2 choices. Either I pay you $1,000 for your iPhone or I pay you $1,200 for your iPhone. And you want to get rid of your iPhone. Which one would you take? Of course, 1,200. So people who are selling here, if they get an option that, hey, you can sell at 530 or you can sell at 530.5. Which one do you think they're going to take? 530.5, right? So I knew, okay, if 530 breaks, we're going to make a big move up because all these sellers will not want to sell up until the next price level hits, which was why I took this trade. Okay, I took this trade, as I explained, at the confluence of the ORB, and I held this trade within this like for 10 minutes kind of job. Once we broke out of this 530, I took some profits the moment it touched 200 simple moving average. And this is 200 simple moving average. These are my settings for it. Right? 200 simple moving average is one of the most important indicators that you will put on your charts. Right? 200 simple moving average. The moment we broke above this, I was still holding some. The moment we broke and went to this 530.5, I took some profits, but I was still, what did I say before? Negative risk management. So negative risk management is you sell your position size. So I sold 50%. I'm holding my 50% at the break even, right? If my entry, let's say if my entry price is 0.65, 0.62, right? And the moment when I took some profits, it's like 0.96. That's the numbers were, all right? Now that's like, what is it? That's like nearly 50% gains, right? And when it pulled back, my stop loss was not triggered. My stop loss is 0.65. So I'm still in it. But then we started forming this very, very nice, like really, really nice trend line on the top. I'm just like, okay, cool. But at the same time, 11 o'clock about to happen. You see what I'm saying? The moment 11 o'clock happens, I go on a 10-minute chart. And then I went on a 10-minute chart. I'm like, sweet, let's see. And the 10-minute chart gave me a beautiful entry. I added a little bit more. The reason why I entered was we broke out of this pre-market high. We broke out. We came back, retested around this 11 o'clock. We were playing around this level, and I added a little bit. The moment we broke above this flag, I added right here. Previous high of the day literally broke. And now I know you might be like, bro, but that's only 20 cent move. I know it's only 20 cent move, which is why, because I knew that it's only going to be a small move previous half the day, and I let my runners run. That's why I added, or I did a little bit bigger position size, you can say, right? I did a little bit bigger position size. I took my profits, and I was like, okay, rest of the runners can go at the break even, and my break even stop loss got triggered roughly on this candle, and I got out. So this is a trade management example, okay? I hope that makes sense. This is a trade management example, and it was a beautiful trade that I took, and I'm like really, really happy about it. All right. Now, the last trade that I took at the same time while this trade was happening was Tesla. Like Tesla is recently, I sold on this particular candle. I sold roughly around this particular area, 181-ish. I should have held, but I sold the entire thing because I was pretty happy with my profits, and I just wanted to walk away. $8,600. At one stage, I'll be honest, I'll keep it real. At one stage, I was thinking like, okay, let's have a $10,000 day. I haven't had a 5-figure day in a long time, so let's see if we have a 5-figure day. But the moment I started thinking that, oh, I need a 5-figure day, I knew somewhere I'm gonna literally fuck it up. Because I remember last time when I was close to like $8,800 or $9,000, and I was like, oh, I'll walk away when I'm up 10,000, right? And I fucked it up, and I walked away with only $3,000 gains on the day. Now, 3,000 is a lot, but I traded like crap, and I lost $6,000. So I knew the moment I start chasing and start trading for money, I need to walk away. Like what I explained earlier in this video, the reason why you will become a good trader is when you start trading for good trades, not just money. That's why I was like $8,600. I'm like, all right, I'm out. And I sold right here, and I literally walked away, and I started making this video. The only reason I started making this video is because now I know for a fact that I have already posted the video about the gains. I don't want to trade. I'm done. Like I'm pretty much, this is me journaling my trades while I'm hopping on this video. You see what I'm saying? So now, this was Tesla's trade. I'm on a 10-minute chart, right? You can see this is a 10-minute chart. I'm on a 10-minute chart, and I see this beautiful, beautiful, beautiful trend line forming. And also we have ORB. What is ORB? First 15-minute-ish range, right? This is kind of the ORB-ish level, first 15-minute range, right? On this 10-minute chart, I'm like, oh, shit, this, I like the, I'm just like sitting there. I'm like, bro, this looks really, really clean. It can make a nice move towards the upside. You know what I'm saying? And now this is what happened on this, right? I started watching it because of this. There's a huge confluence here, the trend line and the ATMA, and also the big critical levels that we are breaking or trying to break, and we are retesting still, right? And I'm like, I like this candle because this looks like a hammer candle. There's a lot of buyers interested, and they push the price up. I added to this trade the moment this 179, or I entered to this trade at moment 179 broke, and straight away it started shooting up. It went too high of the day, previous high of the day. I took some profits around here and I let my runners run, and I'm like, oh, okay, this 180 broke. The moment 180 broke, I'm like, this is not normal. I'm like, this is not normal. It just went 179 to 180 and it broke 180 just like nothing. And we were able to close above 180. The next candle opened, it started picking up. I'm like, oh my goodness. So I'm like watching this 181 level closely. Price went there. I'm like, oh my God, this is so good. And I'm up decent right now. I'm like, oh my God, this is so good. I took some profits, a little bit up, and I got out. I was like, done. I'm happy. Made me a lot of money on this Tesla, and I was really, really happy. And I should have held, but as I said, because I started thinking about that I want to make $10,000, because it kind of got triggered in my brain that I want to make $10,000, and I was just like, I'm just trying to keep it real with you guys, all right? The moment that got triggered, I'm like, oh my God, I cannot be doing this. I need to walk away. And I walked away, and I'm glad that I walked away, because otherwise I might have done something which I don't want to do otherwise. You see what I'm saying? But these were my 4 or 5 trades, as you can say, and the reasoning why I took the trades. But there's one saying that I absolutely love, and I think you should kind of even write it down on a piece of paper. Patience pays the patient hand that waits patiently to be paid. All right, it's really, really strong. It's really, really strong. Patience pays the patient hand that waits patiently to be strong. Now, I heard this first. I don't exactly remember who told me this, but it blew my mind, because it's all about patience. Now you see this trade, yes, but it's a 10-minute candle. 10 minute, like that's 600 seconds for the trade to work out, right? This one candle is 600 seconds. That's another 600 seconds. You see what I'm saying? And this video is probably about 20-minute long video, which is like what, not a lot of time, probably the same time how long it took this trade to work out. You see what I'm saying? It takes long time to make money. We are no scalpers. You could understand the term scalpers was originally made for people who do not know how to hold their runners. You see what I'm saying? It's just a fancy way of saying, oh, I'm a scalper, or in other words, I do not have balls to hold my gains for bigger run. You see what I'm saying? That's why they take small moves. No, you gotta catch big moves. That's how you make money. But to catch big moves, you need to understand patience. You need to sit on your hands. You need to wait patiently for your trade. And look at this. How long was this consolidation? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. That's 12 10-minute candles. That's 2 hours of consolidation, and then the trade moved. You see what I'm saying? Now, in these 2 hours, how many people kept trading this over and over again and they lost all the money? Probably a lot of people, right? But guess what? You need to wait patiently, because the moment the trade comes, you need to catch the trade. Which is why I personally feel like people who have the system, the strategies, you will make money. Like, there's no doubt about it. I'm confident that you will make money once you learn how to make it. You see what I'm saying? Now, look at this. I'm not trying to flex. I'm not trying to, show off. Once you learn how to make money, it becomes easier. Jayton, $170, $300. Amber, second day here in last 2 days, just following your trades, I'm up $3,500, right? And that's a KCU student. Joined literally yesterday, right? Started printing. Again, Jayton. And then we have Brent, $200. Only LTP. LTP is the framework that we use inside the program, right? Then Danny, $1,000. LTP, that's a framework that we use inside the program, right? Took the first trade, made 143. Does it make sense? It's all about the frameworks. It's about how you manage your trade, your entries, your exits, your frameworks, the loopholes, the glitches, the things that actually matter. If you do not have that, it will be a little bit tough for you to make the money. I hope this makes sense. I hope this video made sense. And also, if you want to learn more from me, if you want to learn the systems, the strategies, I am putting together a small group of people, a small case study group, and I'm going to teach people how to make $1,000 to $2,000, $5,000 a day from their trading. If you want more details, or if you want to apply to this, there will be a link probably right above me. And that's all. Probably take you 3 minutes, 5 minutes for your future. If you get approved, I'll send you a message, and let's freaking make some money. All right. Hope you find value out of this. Let me know in the comments down below. If you did, peace. I'm out.